Hi and welcome to our channel, Rich, Retired, and Reckless. It's a common belief that debt is always a negative thing, but the wealthy know that debt can actually be a useful tool for making more money. In this video, we'll explore 6 ways that rich people use debt to their advantage. Building things faster. Wealthy individuals use debt to extend or accelerate business growth. For example, Steve Jobs used debt to obtain the parts he needed to make the first 50 Apple I computers. By borrowing money, he was able to sell the computers on credit and grow his business faster than if he had waited to save up the money himself. This strategy allows wealthy individuals to take on larger projects and achieve more than they could on their own. It's important to note that using debt to grow a business can be risky, as the business may not be successful and the debt may not be able to be repaid. However, for those who are able to make their businesses a success, the rewards can be significant. Adding leverage to investment portfolios. Some investors use debt to boost their returns by adding leverage to their portfolio. For example, if an investor has $100,000 and the market returns 10%, they earn $10,000. But if they add $35,000 in leverage to their portfolio, their total investment becomes $135,000 and their return increases to 13.5%. However, this strategy carries more risk as well. If the market declines instead of rising, the investor could lose more money than they would have without the leverage. It's important for investors to carefully consider the potential risks and rewards before adding leverage to their portfolio. Shorting. Another way that investors can use debt to make money is by shorting stocks. This involves borrowing stock from a brokerage firm and selling it with the expectation that the price will decline. The investor can then buy back the stock at a lower price, return the borrowed stock to the brokerage, and keep the difference as profit. This strategy can be risky, as the stock price could also rise and result in a loss for the investor. Shorting is a more advanced investment strategy and is not suitable for everyone. It's important for investors to fully understand the risks and rewards before attempting to short a stock. Using debt to acquire assets. The wealthy often use debt to acquire assets that appreciate in value, such as real estate or fine art. By borrowing money to make these purchases, they can turn a profit when they sell the assets later for more than they paid. For example, if an investor buys a piece of real estate for $100,000 using debt and the property appreciates in value to $150,000, they can sell it and pay off the debt, keeping the difference as profit. It's important to note that using debt to acquire assets carries the risk that the assets may not appreciate in value as expected or may even decrease in value. It's important for investors to do their research and carefully consider the potential risks and rewards before using debt to acquire assets. Debt restructuring. Some wealthy individuals use debt restructuring to their advantage. This involves negotiating new terms with creditors in order to reduce the amount of debt owed or to lower the interest rate. By restructuring their debt, they can save money and improve their financial situation. This can be especially useful for businesses that are struggling to meet their debt obligations and need to find a more manageable solution. Debt restructuring can take many forms, depending on the specific needs and circumstances of the individual or business. For example, a business owner may negotiate with their creditors to extend the repayment period, which would lower their monthly payments but increase the overall amount of interest paid. Alternatively, they may be able to negotiate a lower interest rate, which would reduce the overall cost of the debt. It's important to note that debt restructuring is not a magic solution for debt problems. It's still important for individuals and businesses to carefully manage their finances and make sure they are able to meet their new debt obligations. However, for those who are struggling with debt and need to find a way to improve their financial situation, debt restructuring can be a useful tool. Debt restructuring can be a complex process, and it's important for individuals and businesses to seek the advice of a financial professional before attempting to restructure their debt. A financial advisor or attorney can help negotiate with creditors and develop a plan that is feasible and sustainable for the individual or business. Using debt to start a business. Many successful entrepreneurs have used debt to start their businesses. By borrowing money to fund their ventures, they were able to get their businesses off the ground and grow them into profitable enterprises. This can be a risky strategy, as the business may not succeed and the debt may not be able to be repaid. However, for those who are able to make their businesses a success, the rewards can be significant. It's important for aspiring entrepreneurs to carefully consider the potential risks and rewards before using debt to start a business. In conclusion, debt can be a powerful tool for the wealthy if used wisely. By using debt to build things faster, add leverage to investments, short stocks, acquire assets, restructure debt, and start businesses, the rich can use borrowed money to make even more money. However, it's important to remember that each of these strategies carries its own set of risks, and it's important to carefully consider the potential rewards and drawbacks before using debt in these ways. Thank you for watching, and we hope you found this video helpful. If you have any questions or suggestions for future videos, please leave a comment below. Don't forget to like, share, and subscribe to our channel for more great content on personal finance, investing, and achieving financial freedom. Until next time, stay rich, retired, and reckless.